All right, let me ask you something. Why does it feel like the market is completely insane right now? One day stocks are ripping higher, next day they're collapsing. Oil spikes, gold crashes, tech rallies, then everything sells off at once. And the average trader? Completely confused. Because nobody is explaining what's really happening behind the curtain. Today I'm going to show you something most traders never understand. Not indicators, not some magical strategy, but the real game that moves the market. And once you see it, you'll never look at trading the same way again. Let me paint a picture. A few weeks ago, traders were screaming, "Recession is coming." Then suddenly the market rallies. Then geopolitical tensions spike. Oil explodes, indices crash, and retail traders start panic selling. Sound familiar? This cycle repeats again and again because retail traders react to headlines, but professional traders react to liquidity. And if you don't understand liquidity, you're basically gambling. Let me show you the biggest mistake traders make. They think markets move because of news. Wrong. Markets move because of positioning. By the time the news hits Twitter, institutions have already taken their positions. And retail traders? They're the exit liquidity. Let's talk about what's happening right now. Stocks have been on an insane bull run for years. Tech stocks exploded. AI hype pushed valuations higher. Everyone believed the market could only go up. But here's the problem. The higher a market climbs, the more fragile it becomes. Imagine stacking blocks higher and higher. At some point, even a small push knocks everything down. That's exactly how financial markets work. And here's the part nobody talks about. Markets don't crash when everyone is scared. They crash when everyone feels safe. When traders believe the dip will always recover. When people start buying every single pullback. When risk feels invisible. That's when the system becomes dangerous. Think about the psychology. New traders enter the market. They see charts going up. They see influencers making millions. They think trading is easy, so they go all in. Options, leverage, margin. And suddenly, the market becomes overloaded with risk. Now here's where things get interesting. Because the market right now is sitting at a very dangerous crossroads. On one side, central banks want to cut interest rates to support the economy. On the other side, inflation still hasn't fully disappeared, and geopolitical tensions are creating massive uncertainty. This creates a perfect storm, because traders don't know which direction the market will break, up or violently down. Now let's talk about volatility. Volatility is where traders either make fortunes or blow up their accounts. Most beginners hate volatility. They panic. They overtrade. They revenge trade. But professionals, they love volatility because volatility creates inefficiencies, and inefficiencies create opportunities. Let me explain something critical. The market is not random. It moves between liquidity zones. Where do those zones exist? Exactly where retail traders place their stops. Above resistance. Below support. That's where the money is. And institutions know it. Imagine this scenario. Thousands of traders place stop losses below a key support level. Price approaches that level. Everyone thinks support will hold. But suddenly, the market drops hard. All those stop losses trigger. Liquidity floods the market. And institutions buy everything at a discount. Then price shoots back up. Retail traders get stopped out. And the smart money wins again. This is called a liquidity sweep. And once you understand this, you start seeing the market completely differently. Support and resistance? They're not walls. They're traps. Now let me tell you something that might shock you. The biggest enemy in trading is not the market. It's your own psychology. Fear, greed, impatience. These emotions destroy more traders than any market crash. Because trading forces you to confront yourself. Your discipline, your patience, your ego. Let's talk about discipline. Professional traders don't trade all day. They wait. Sometimes hours, sometimes days, sometimes weeks, waiting for one perfect setup. Retail traders, they need action. They feel uncomfortable sitting still, so they force trades, and forced trades lead to losses. Here's a brutal truth. Most traders lose money, not because trading is impossible, but because they refuse to behave like professionals. They overtrade. They ignore risk management. They chase pumps. They panic during dumps, and the market punishes them for it. Now here's the solution. The shift that separates amateurs from professionals. You stop asking, "Where's price going?" And you start asking, "Where's the liquidity?" This one question changes everything. Because markets move toward liquidity like magnets. Stop losses, liquidation levels, options positioning. That's the real map. Let's build a smarter approach. Step 1. Stop trading every move. You don't need to catch every opportunity. You just need a few high-probability setups. Step 2. Protect your capital. If you lose your account, the game is over. Risk management is survival. Step 3. Think like institutions. Where are traders trapped? Where are stops clustered? Where would smart money push price to create liquidity? That's where the real moves happen. And here's something else. Trading success isn't about being right. It's about managing risk. Even the best traders lose trades. Sometimes a lot of them, but they keep losses small. And when the big trade appears, they're ready. Most traders blow up before their edge plays out. They quit too early. They size too big. They chase excitement instead of consistency. But trading rewards patience. Over time, discipline compounds, experience compounds, confidence compounds, and suddenly the market starts making sense. So if you're feeling frustrated right now, good, because that frustration means you're starting to see reality. Trading is not a casino. It's a psychological battlefield. And the traders who win are the ones who master themselves first. Now imagine something. What if instead of reacting to the market, you could start anticipating it? Seeing liquidity traps before they happen, understanding why volatility appears, recognizing when the crowd is wrong. That's the level every serious trader must reach. And here's the truth, most trading channels won't tell you. This takes time, years sometimes. But the payoff? Financial freedom, control over your time, and a skill that can change your entire life. The market will always test you. It will shake you out. It will try to break your confidence. But if you stay disciplined, if you focus on learning instead of gambling, you'll slowly move from the losing majority into the small group that truly understands the game. So the next time the market crashes, don't panic. Observe. Where is liquidity being taken? Who is trapped? Who is forced to exit? Because behind every crash, there is opportunity. And the traders who stay calm are the ones who profit. The market rewards preparation, not prediction. Master the process, and the profits follow. I'll see you in the next one.